Hey tech enthusiasts, welcome to Wednesday's edition of Tech Stocks Daily. Got a powerhouse lineup for you today. We'll dive into Zoom's roller coaster week, tackling huge interest from big money investors and a groundbreaking partnership with Mitel. Then we'll explore Apple's latest shakeups, from stock performance to banking pivots and chip-making highlights. CrowdStrike's sizzling new security tools and dramatic legal saga are on deck too. Plus we dissect the explosive allegations rocking Supermicro computer. Buckle up, it's going to be a wild ride through today's tech stock madness. Wow, we've got a Zoom-centric extravaganza today, everyone. Buckle up for a wild ride through the latest in tech news featuring our favorite video conferencing giant, Zoom Video Communications. They're absolutely stealing the spotlight, making headlines across various aspects of finance, stock performance, and strategic partnerships. Let's dive into it. First up, let's talk trading. Big money investors, also known as whales, have shown deep interest in Zoom's options. Picture this, bulls and bears grappling it out in a market equivalent of a mixed martial arts bout. A notable 50% of these trades are split evenly between bullish and bearish. The big bets are flowing, with hefty put options and juicy call options maturing in a price window ranging from $55 to $75. These trades underline how intriguing the market finds Zoom, especially given its volume and open interest, shedding light on investor liquidity and sentiment. While options trading might sound like juggling flaming torches on a unicycle, the investment sentiment leans towards optimism. With further analysis revealing Zoom stock jumped by 21.2% over the last 3 months, we've got Zoom seriously outperforming the broader tech sector, which saw a slump of 4.4%. Curious whether now's the time to dive into Zoom stocks or hold what you've got? Hold that thought, because we need to discuss Zoom's recent strategic maneuvers. Zoom's been doing more than just tweaking your virtual backgrounds. Their recent moves into AI-powered meeting assistants, contact centers, and phone systems are starting to impress the corporate world, building new revenue streams and diversifying their product lineup. Zoom's impressive expansion is reinforcing its user base, a robust 3,933 customers who contribute over $100,000 annually. That's a 7% growth, solidifying its enterprise appeal. Listen up, eager investors. Zoom projects their revenues to hit between $463 to $4.64 billion for fiscal 2025, with earnings per share estimated around $5.31, a 1.9% growth. It's like watching your personal investment rocket soar upward inch by inch. And now, on to the pièce de résistance, Zoom and Mitel's dynamic partnership announcement. This is like Iron Man shaking hands with Thor, two powerful players joining forces to unleash an AI-first hybrid communication monster into the corporate arena. This partnership will cater to enterprises yearning for the elusive best of both worlds in hybrid cloud communications. Zoom's elite workplace platform meshes seamlessly with Mitel's renowned communication framework to offer embedded, slick, no-fuss solutions that enterprises have been longing for. Talk about getting work done efficiently. With leaders consciously forging more flexible working approaches, this flexible model and cutting-edge AI integration will appeal to enterprises who prioritize versatility without overlooking security and control. Eric S. Yuan, Zoom's CEO, and Mitel's head boss, Tarun Lumba, have interesting words for you. They're dedicating this collaboration to address expanding enterprise needs in a fast-transforming work environment. It's straight-up poetic, if not outright heroic. Overall, Zoom's got its hands in every pie, whether it's outclassing broader tech market ups and downs, fostering lucrative investor confidence, or striking power deals with Mitel. I think it's fair to say that Zoom's roadmap ahead is looking strikingly innovative and potentially game-changing. So, there you have it, folks. Stay tuned for more exciting updates because let's be real, the tech world never sleeps. All right, tech enthusiasts, buckle up because today's news is all about the juggernaut that is Apple. We're diving into their stock performance, a big management mea culpa, potential new financial partnerships, and some juicy semiconductor shenanigans. So let's get into it. First off, if you're one of those folks who bought a single share of Apple stock back at its IPO in 1980, give yourself a round of applause. You'd be sitting on 224 shares worth nearly 48 grand today. Talk about a glow up. Adjusted for splits and all, that means your investment has grown more than 2,200 times. And what's driven this astronomical rise? Apple's ingenious innovations and strong market positioning, with products flying off the shelves and a devout consumer base that never skips a new iPhone launch. Just recently, Apple rolled out iOS 18, packing it with shiny new features that keep us glued to our screens. However, not everything's been rainbows and unicorns post-iPhone launch. Apple shares didn't quite make the spectacular leap some had hoped for after their Glowtime hardware event. Portfolio manager Dan Niles even had a mea culpa moment when iPhone 16 sales fell short of lofty AI-boosted expectations, dropping nearly 10% compared to last year. Niles likened this to Roy Amara's law. We tend to overestimate the effect of a technology in the short run and underestimate it in the long run. Despite some doom and gloom, he's holding out hope for Apple's long-term prospects, especially with those AI features eventually landing in China by 2025. Speaking of game changers, Apple might soon partner with JP Morgan for their credit cards, waving goodbye to their current partner, Goldman Sachs. The proposed shift stems from Goldman Sachs facing losses in its consumer division, particularly with the Apple Card, Now JP Morgan wants in, but under better terms, negotiating deals to manage around $17 billion in outstanding balances. This move is all about optimizing conditions for both parties. Apple, ever the user-friendly brand, isn't panicking and aims for a smooth transition if it happens. Meanwhile, deep in the heart of Arizona, Taiwan Semiconductor Manufacturing Co. has started producing Apple's A16 chips. These bad boys debuted in the iPhone 14 Pro and are now set to churn out at the Arizona fab, matching yields from their Taiwan counterparts. Even though Apple is facing market share slips in China, Taiwan Semiconductor is riding high on demand for NVIDIA AI chips, and a deal to manufacture Google's Pixel chips is on the horizon. Stock movements? Apple shares are slightly up, finishing the day at 219.88. Not bad for a disappointing short term, huh? As for Taiwan Semiconductor, they're also enjoying a city view, up 0.23% at 167.74, and soaring high with an impressive 89% gain over the past 12 months. There you have it, folks, a whirlwind day in the life of Apple that proves whether it's stocks, new tech, or market shifts, they're always giving us something to talk about. Hold on to your keyboards, folks. CrowdStrike has been buzzing in the tech news for several reasons today, and boy, does it have layers, much like an elaborate hack you'd see in a cyber thriller. First up, let's talk about some new tools CrowdStrike has just launched. The company has rolled out its AI Security Posture Management and Data Security Posture Management. Fancy acronyms, right? But what do they mean? These innovations form part of the CrowdStrike Falcon Cloud Security Platform, positioning it as the lone, cloud-native application protection platform that offers comprehensive, integrated protection. With these tools, the platform can secure cloud infrastructure, applications, data, and yes, even those elusive AI models, all from a unified console. Imagine a Swiss Army knife for cloud security, but smart. As organizations increasingly adopt hybrid cloud and AI strategies, complexity and gaps arise, creating vulnerability hotspots, said Michael Santonis, CrowdStrike's president. These tools aim to plug those gaps, making life difficult for cyber adversaries. They didn't stop there. CrowdStrike has also partnered with DAS to crisp up the cloud security even further. Thanks to this partnership, Falcon Cloud Security will now feature DAS's security remediation insights, giving developers and infrastructure teams actionable recommendations for code fixes and remediation. Essentially, it's like turning your security system from a barking dog into a tactical SWAT team. Just as you were about to call it a day's work on cybersecurity news, here comes the plot twist: a class action lawsuit. The Gross law firm has sounded the alarm for CRWD shareholders, who bought shares during a specified period, to come forward. Allegations claim that the company's deficient controls and poor software testing for their main product, Falcon, created major outages and posed severe reputational and legal risks. False and misleading statements allegedly led to an artificial inflation of the stock price. Not exactly the sort of vulnerability you'd expect from a cybersecurity heavyweight, right? And last, but definitely not least, let's talk stock performance. CrowdStrike's stock has been on what could only be described as a storyline straight out of a suspense novel. Over the past year, it's had its ups and downs, delivering a healthy 56% gain, but tumbling about 34% from its peak due to a gnarly software update malfunction that affected several global IT systems. Despite these hurdles, analysts remain bullish. We're talking 82% rating it as a buy. The stock has a median price target of $315, suggesting a 21% jump from its current levels. And get this, the highest street target is a cool $540, implying a whopping 108% spike. Looking ahead, while the road may be a bit bumpy due to the aftereffects of that software update outage, analysts believe the company's robust revenue pipeline and expanding total addressable market are reasons to keep an eye on CRWD for steady gains in the long run. So, whether you're a cybersecurity geek or an investor, today's news leaves you with a lot to chew on regarding CrowdStrike, complete with cutting-edge tools, legal drama, and stock market intrigue. Hey tech enthusiasts, buckle up because we've got a juicy saga unfolding in the tech world involving Supermicrocomputer Inc., known as SMCI on the NASDAQ. So, what's the buzz? Supermicrocomputer is in hot water after Hindenburg Research dropped a bombshell report on August 27, 2024. Hindenburg isn't just talking minor hiccups here. They're alleging heavy stuff like glaring accounting red flags, evidence of undisclosed related party transactions, and even sanctions violations. Yikes. If that's not enough to set off alarm bells, have you ever heard of customer issues? Their customers are also reportedly unhappy. Naturally, everyone, investors, analysts, and possibly even the office pets, reacted fast. The price of SMCI stock plummeted a whopping $21.6562.51 per share on August 26, 2024, to just $443.49 by August 28, 2024. It doesn't take a financial guru to figure out that this is bad. Now, this has led to several class action lawsuits being filed. Firms like the Gross law firm are urging SMCI shareholders who suffered losses to join the legal battle. They have until October 29, 2024 to register for the class actions and potentially become lead plaintiffs in the ongoing lawsuits. And they're not the only ones jumping at this opportunity. Conswick & Foti, LLC is also on the march, rallying investors who've lost over $100,000 to step forward. They're emphasizing that SMCI and certain high-ups failed to disclose significant information during the class period between February 2, 2021 and August 28, 2024. Imagine being described in Hindenburg's report as showcasing fresh evidence of accounting manipulation, sibling self-dealing, and sanctions evasion at this AI high flyer. Ouch, right? That's practically an all-you-can-sue buffet. And in response to all these explosive allegations, the reaction in the already jittery stock market was predictable. To add fire to the flames, SMCI stock continued its downward spiral, tanking following the Hindenburg revelations. Investors saw red and law firms smelt blood. The current battlefield is heating up with multiple firms urging eligible shareholders to jump in and try to mitigate their losses. It's a lot, right? But that's what we're here for, to break it down and keep you in the loop. Now, over to you. What do you think about this SMCI scandal? Do you believe Hindenburg's report is accurate, or is it just another case of market manipulation? If you were an investor, would you sign up for the class action? Drop your thoughts in the comments below, and let's get this conversation started. Remember to like, subscribe, and hit that notification bell so you don't miss any updates on this evolving story. Catch you in the next segment. Let's talk about and whether you should sell, buy, or hold this stock based on today's news. Given the recent updates, I would lean towards holding Zoom stock right now. Here's why. The case for holding Zoom stock. 1. Active big money interest. The big money investors, or whales, are putting serious dough into Zoom's options. This is a sign that there's intrigue and confidence in the stock's future performance. Both bullish and bearish bets are fairly balanced, indicating mixed sentiment but also potential for movement and growth. 2. Stock performance. Over the last 3 months, Zoom's stock has surged by 21.2%, notably outperforming the broader tech sector, which saw a decline of 4.4%. This indicates that Zoom is bouncing back valiantly and could be on a steady ascent if this trend continues. 3. Innovative moves. They're not just resting on their laurels of being a go-to video conferencing tool. With new ventures in AI-powered meeting assistants, contact centers, and phone systems, Zoom is diversifying its product slate, making it an innovative and attractive investment from a long-term perspective. 4. Power partnerships. The collaboration with Mitel is a huge win. Combining Zoom's forward thrust into hybrid cloud communications with Mitel's established frameworks should result in a robust new product offering. Enterprises are increasingly eyeing hybrid models, which places Zoom right in the sweet spot for future growth. 5. Revenue growth projection. Zoom projects their revenues to hit between $464 billion for fiscal 2025, with earnings per share around $5.31. This points to stable growth expectations, making it a more appealing long-term hold. Harb, why not buy more Zoom just yet? Despite the optimistic news, there's always some risk in jumping right in without seeing how these new initiatives play out. Long-term adoption and integration of their new products and the success of the Mitel partnership are still variables to watch. Why not sell Zoom? Selling shares now might make you miss out on the potential upside from these strategic expansions. The recent stock performance and future revenue projections suggest more room for growth, making a hasty sell possibly regretful. The upshot: Zoom's ability to innovate, outpace its market segment, and form strategic alliances bodes well for its future. For current shareholders, holding seems wise to capture further potential gains. However, remember, this is just one perspective. Always make sure you do your own comprehensive research and consult with financial advisors before making any investment decisions. Like this segment? Smash that like button, and don't forget to subscribe for more insights. Your comments and thoughts are always welcome, so let's discuss below. Wow, what a roller coaster day on the NASDAQ. Zoom's options frenzy and strategic moves had us on the edge of our seats, while Apple's juggernaut status faced hurdles but left us hopeful for the long game. CrowdStrike rolled out killer new security tools amidst legal drama and volatile stock vibes, and Supermicro Computer felt the heat from some explosive allegations. If you enjoyed today's dive into tech stock madness, smash that like button, subscribe, and share this video with your fellow tech aficionados. Don't forget to tune in tomorrow for another action-packed tech news roundup. Happy investing!